Hello, everyone, and welcome to Thursdays Live with Chug. Each week, we cover pressing topics that matter to you and your business. I'm Arianna Gonzalez from Chug, attorneys and CPAs tuning in from our San Diego office. Please join me in welcoming CPAs Varshika, Gupta, and Rajesh Ghimire from our Santa Clara, California office. Hi there, Varshika and Rajesh, and welcome.
Hi, Ariana. Thank you so much for having us.
Thank you for being here. So for today's topic, we're going to be talking about PFIC, FBAR, and 8938 reporting. Just a quick disclaimer for everyone who's tuning in, we are live on LinkedIn and Facebook. This conversation is for informational purposes only. It does not create an accountant-client relationship, so please email us your questions at info@chug.com so we can help you out. Now let's get right into it. Can one of you tell me what is PFIC and what companies are PFIC?
Hi, Ariana. Sorry, I was muted. Thanks for welcome. So, PFIC is it stands for the Passive Foreign Investment Company. So you can say that it is a foreign company whose income is mainly from the passive source. So they don't have any income from the business income. So as per the IRS, there are two ways to test that. One is the income test, and other is the asset test. So if in income test, if there is a more than 75% of gross income is more than the passive sources, then it will be said to be the income test is passed, and that is the PFIC. Okay, and either or. So if there is asset test that more than 50% of the gross assets are more than those assets that is used for generating the passive income, then those are called the PFIC companies. So PFICs have two tests, one is asset and one is the income test. So if you fulfill any of the criteria, then that would come into the PFIC, and you have to report accordingly.
Wow, that's really good to know. So is PFIC income taxable, or do we have to know anything about that?
Yeah, obviously PFIC is taxable, and there is no limit that okay, you have if this much of the PFIC income is there, that not taxable. There is no such limit. So if you have invested in any of the PFIC companies, then that will be taxed accordingly. But it will depend on which election you are making, how you are going to give the tax. But yeah, it will be obviously taxed, and there is no limit for that income.
Wow, okay, so how can I avoid PFIC status?
PFIC status, you can avoid only if you are not investing on those companies. So if so before you are investing in any foreign investment, you have to know that whether the company is criteria, that asset test and income test, is it fulfilled or not. If that is fulfilled, and if that is the PFIC status, then you can't avoid. So only way out is to not to invest in those companies where PFIC is applicable. So you have to avoid those investment mainly.
Okay, that's really helpful to know. So what is the time limit for PFIC reporting?
PFIC reporting, there is no that we used to report when they're out like for individual, we have different deadline, text deadline. So at that the same timeline, we have to file separate form 8621 for the income purpose. And for the outstanding balance, like we have FBAR and 8938, other forms are there for the balance outstanding. But for the income purpose, we have to report all those income in form 8621. And that will be filed at the time of normal. If you are filing as an individual, then the April 15 is the deadline, and for other that corporate also April 15, if not extended. So it will go with the same return. You shouldn't file separate form, but it will go with your own return.
Wow, that's all really great information. Now, a very important question. How much is PFIC tax?
PFIC tax, there is no separate tax like for the PFIC, but yeah, it depends on the criteria what you are selecting, which method you are selecting. And it depends on your holding period and everything. It may be taxed as a capital gain or excess distribution. It may depend. So it may be taxed at a higher tax rate that is applicable in the previous year if you follow excess distribution method. So that depends on the criteria and the holding period and everything that. So there is no specific tax that okay, if the PFIC income is this much, then this will be taxed. There is no that much, but like that. But you have separate how it is taxed, what criteria you are fulfilling, and what you have select the election depends on that PFIC tax.
That's good to know. If you guys are watching this and have any questions about this, definitely send us an email at info@chug.com so we can help you out. So what are the PFIC statements used for? Can you share that with us?
PFIC, as I already mentioned that first PFIC statement is 8621 when we used to report the income. And others are for the balances, yeah, how much that depends on the limit that like some have like more than 10,000 K, if then it will be in the FBAR and like at 938. So these are other for the income purpose, you have to report all those income in form 8621.
I see. Can you talk about what the tax options are for PFIC?
Tax option for
The tax options for PFIC?
yeah, the options are that one is the mark to market option. Second is the excess distribution, and third one is the qualified electric fund. So you can select any one of them, but yeah, if mark to market you are selecting, then that should be a marketable securities. So that depends on criteria. So there are mainly three criteria where you will be taking the election and give tax accordingly.
Okay, so what are the rules for PFIC income reporting?
Rules for PFIC, yeah, as I mentioned that PFIC income reporting, the rules are same that you have to give the tax, okay, if there is a income, there is no limit. And certainly, if like you are following whatever the election you are doing, based on that, like if you are following mark to market, then you have to give tax annually. And for QEF also, qualified electric fund also, you have to give annually. And if you are doing excess distribution matter, then that depends whenever the actual you have sold the asset or whenever there is actual distribution, then at that time you have to pay the taxes.
Got it. I appreciate you sharing that with us. Can you cover what is mark to market election?
Yeah, sure. So mark to market election is like you have to just go whatever the fair value as and that, like if you are following December year end, then you have to see that December year end what is your value of your investment. So you have invested in the mid of the year, and at the year end, like earlier you have invested in $100 and it reached to $120. So that you have to reach to $120 and you have to pay tax on that $20. So whatever the market value is there, and that day you have to go on paying tax on those in annual basis. So and losses also you can take, but losses are restricted to the prior year gain. So you can't go more than the whatever losses you have already, whatever gain you have already claimed, you can't claim more than that loss. But yeah, so whatever the market value is there, you have to just mark your investment to that value and pay the tax. So this is annually, and usually people used to follow this one if their securities are marketable.
Wow, that's all really great information. I appreciate you sharing that with us. Can you cover what is qualified electing fund election and what is the PFIC annual information statement?
So qualified elected fund is one of the election criteria. If somebody can't do mark to market, then they can do this one also. But you have to take this annual information from the PFIC company. If they are providing this statement of the annual financial information, so then you can use this QEF. Okay, in that statement, you will include like whatever the income, whatever the expenses, gain, that all details are there. But every PFIC company will not provide you that. So that depend on their policies of the PFIC companies and whatever the procedure they are following. So if they are giving then this also annual reporting. Annually, you can report whatever the income or expense or gain that is reported in those statement. You can report that in your regular normal income tax and pay tax annually. Like it is mark to market also, it is going to whatever the value as on the year end. And in this QEF, you will get actual income expenses proportionate to your investment. So you can report that in your tax return and pay the taxes. So it is also annually filed. But the issue is that every company may not give you that statement. So that depends on the company, PFIC companies, that is where you have invested. So you have to be careful that whether while selecting the election, that whether they will be giving this statement or not.
Wonderful. That's really important information. I appreciate you answering all our pressing questions on PFIC. One more question on this topic. Can you touch on excess distribution?
Yeah. So in out of these three election, one excess distribution is a little bit challenging and complex one. So excess distribution means any gain, any distribution. If you get any gain, okay, realized from the sale of the PFIC or any actual distribution is there, then that gain is compared with the last 3 years average. So if it is more than 125%, then that will be called as excess distribution. So in that excess distribution, you have to pay tax in the prior year as if that you have not paid tax on those prior years. Suppose you are holding like for 2 years, 3 years, and there was no distribution and nothing was there. And in the third year, fourth year, you are getting some distribution. Then that are compared to the last previous year. So if there is no distribution, then that may be all be considered as the excess distribution, and it will be taxed that in the prior year tax rate, higher tax rate. So like in the first year investment, if there is a first distribution, then that may not be called as the excess distribution. But every first distribution is not the first year's one, because like you have invested in the first year and you have received distribution in the second year, though that is your first distribution, but it is distributed in the second year. So it may be called as the excess distribution, and you may be taxed with the higher tax rate bracket of the prior year. And even you have to pay the interest, like you have deferred the tax, though you haven't done deferred, because basic concept is that you will not pay tax under growth, and you will be paying tax only when it is distributed or you sold. But in excess distribution concept, what is done that though you are not paying tax on growth, but whenever it is distributed or anything like that, then you have to pay tax, like you haven't paid tax in the prior year and that is your fault, so you have to pay like interest and everything like that. So that excess distribution is little bit tricky, and more taxes and interest is to be calculated. So people generally follow mark to market, so they can be do yearly, and whatever taxes they can pay on yearly basis.
That sounds like it can get pretty complex, so I do appreciate you summarizing all of this for us. And if you guys do have questions about this and you're watching this, please email us at info@trigg.com. We'll connect you with Rajesh and he can help you out. Thank you so much, Rajesh. Let's move on to FBAR. Varshika, can you share with us what is the meaning and purpose of FBAR?
Sure, Ariana, thank you. So FBAR refers to Form 114, which is a report of foreign bank and financial account, which is electronically filed with the Financial Crimes and Enforcement Network, which is commonly called as FinCEN, a bureau of Treasury Department. The purpose of FBAR is that US persons maintain overseas financial accounts for a variety of legitimate reasons, including convenience and access. Now, the foreign financial institutions are not subject to the same reporting requirements as the domestic financial institutions. The FBAR, therefore, is used by the US government to identify persons who may be using foreign financial accounts to circumvent the US law. The information reported on FBAR can help identify the government, help identify or trace funds used for illicit purposes, or identify unreported income which is generated abroad or maintained abroad by the US person.
Wow, thank you for sharing that. That's all really great information. So who is required to file FBAR, or who must file FBAR?
Any US person, including a citizen, a resident, or corporate, partnership, trust, estate that has a financial interest in or a signature authority over a foreign financial account, must file an FBAR if the aggregate value of that foreign financial account exceeds $10,000 during the calendar year. Now, the question you would ask that what is a foreign financial account? So generally, an account is at a financial institution located outside the US is a foreign financial account. It could be a bank account like a savings account or a checking account, or it could be a securities account, or it could be annuity or insurance policies with a cash value, or a mutual fund or investment in a provident fund or a public provident fund. However, it is important to note that whether an account produces a taxable income or not, for FBAR purposes, that's not a criteria to determine whether the account is a foreign financial account.
That's really great information. I appreciate you going through all of that with us, and what is the foreign financial account, who needs to file FBAR. So when and how are we supposed to file the FBAR? Can you share that with us?
Sure. So FBAR is filed electronically through FinCEN and not with the IRS. The due date is April 15th following the calendar year reported, with an automatic extension until October 15th. However, for some reason, if a person wants to paper file the FBAR, the Form 114, she can make a call or request the FinCEN through and request for an exemption from e-filing.
That's great to know. So you said they have between April and October to
That is
file
correct.
this. And what is the FBAR limit?
So, like I had mentioned before, the maximum value of a foreign financial account is what is required to be reported. The If the maximum value does not during the year the account value does not exceed $10,000, then the reporting of FBAR is not required.
Got it. So for the maximum account value of a foreign financial account, did you say that's 10,000 or is there a maximum account and how is that determined?
Yeah, so the maximum value is what we need to report, but the reporting requirement triggers only if the account value is more than 10,000. And the maximum value is calculated according to a periodic statement. It could be like a bank statement. And the value is first determined in the local foreign currency, which is then converted to USD using the exchange rate at the end of the calendar year.
Thank you. That's really great to know. So what information is actually reported on Form 114 for the FBAR? Can you give us some insight on that?
Sure. So for each account reported on FBAR, following information is generally reported. It is the name on the account number, the name and address of the foreign bank, the maximum value, which is the most important, and the type of account.
Thank you. That's really good to know. So are there any exceptions to filing FBAR? If there are, what are the exceptions? Can you share?
Yeah, sure. So there could be scenarios where the FBAR may not be required to be filed. Some of the situations could be where by a US person, that is an entity named in a consolidated FBAR filed by a greater than 50% owner. In cases where the joint account foreign financial accounts held by spouses together, and one of the spouses filing all the foreign financial accounts jointly held by them in his or her FBAR. In case of individual retirement accounts or 401k retirement accounts, the owners and beneficiary, an owner or beneficiary located in the US doesn't need to report a foreign financial account held by or on behalf of a foreign investment made by the IRA or a foreign or a 401k account. So these are a few of the exceptions of not filing FBAR.
Okay, so there are a few exceptions. So if you guys are watching this and wondering if you are part of that exception, definitely reach out to us and we can connect you to Varshika and she can help you out. So one more question on this topic for you, Varshika. What are the FBAR penalties for non-filing, if there are any?
There are huge penalties for the non-compliance. For each non-willful failure by a US person to timely file or accurately disclose, the penalty is $10,000. However, if if the non-compliance is willful, the penalty could be as high as greater of $100,000 or 50% of the highest of the maximum amount in the foreign financial account maintained abroad.
That's quite a large penalty.
Yeah.
Make sure you guys are filing if you do qualify for this. And if you have questions, reach out to us. We're happy to help you guys out. Thank you so much for covering all those questions on the FBAR, Varshika. Let's move on to 8938 reporting. So can you share with us what is the meaning and purpose of 8938?
Sure, certainly. So certain US taxpayers holding specified foreign financial assets exceeding certain threshold, they are required to report the maximum value of that foreign financial asset by filing Form 8938, and that form is attached to your tax return and is filed with the IRS.
So you were mentioning a little bit about the form. Who exactly has to file this form?
So specified individuals, including citizens, residents, or certain non-residents, as well as domestic entities, could be corporations, partnership, trust, or estates that have an interest in a specified foreign financial asset and who meet the reporting threshold, they are required to file Form 8938 with the IRS. However, what is important here to note is the filing of Form 8938 is different from filing of Form 114, which is filed with FinCEN, and Form 8938 is filed with the IRS.
Okay, that's really important to know. So which foreign assets should be reported on this Form 8938? Can you share that with us?
Yeah. So specified foreign financial asset could be a financial account maintained at a financial institution abroad, like a bank account, or a foreign financial account held for investment, could be stocks or securities or any interest in foreign entity, or it could be any financial instrument or a contract that has an issuer or a counterparty that is not located in the US.
That's really helpful. I appreciate you covering that for us. So when and how are we supposed to file Form 8938?
Yes. So Form 8, like I had mentioned before, Form 8938 is required to be e-filed along with the tax return. You can paper file it if there, for some reason, the tax return is getting paper filed.
Great. And what is the threshold limit for 8938?
So reporting threshold limit is different for individuals and for entities. And in the individuals also, it depends on whether the individual is living in the US or outside the US, and what is the filing status of the individual filing the tax return. So for an individual living in the US and filing a single return, or a married filing separate return, the limit is the value of foreign, if the value of foreign financial asset is greater than $50,000 at the end of the tax year, or $75,000 at any time during the year, then the Form 8938 filing requirement triggers. Similarly, if the individual living in the US and filing a joint return, the limit is $100,000 at the end of tax year and $150,000 at any time during the year. Now, for individuals living outside the US filing a single return or an unmarried return, the limit is $200,000 at the end of tax year and $300,000 at any time during the year. And for a joint return for individuals living outside the US, the limit is $400,000 at the end of tax year and $600,000 at any time during the calendar year. However, the limit for the entities, corporations or partnerships, etc., the limit is $50,000 at the end of tax year and $75,000 at any time during the calendar year. So if the asset value exceeds, the foreign asset value exceeds any of the limit, then taxpayer is required to file this Form 8938 with the IRS.
Great. So the threshold limit does vary. So make sure you guys are
That's correct.
checking, make sure you're looking at the right numbers. And if you have questions, of course, reach out to us at info@tube.com. So what is the reporting period and how is the maximum value determined for the 8938?
So unless an exception applies, the reporting period typically is the tax year for which we are filing the tax return. And in case of foreign financial assets, as per the 8938 instructions, the maximum value is calculated. It could be the FMV. Like FBAR, the value is first determined in local currency. That value is then converted to USD using the exchange rate at the end of the tax year, and not calendar year, which we use for FBAR.
Good to know. End of tax year. Okay. So what are the penalties? The big question. What are the penalties for non-filing of Form 8938?
Yeah, so penalty for non-filing or non-compliance of filing of Form 8938 is $10,000 for any failure to file or filing of incorrect Form 8938 by due date, including the extensions.
So make sure you guys are filing this form on time and getting all the help that you need if you do have questions on it, because there is a large penalty, as we were talking about earlier as well. So how is Form 8938 different from FBAR?
So like I had covered in my discussion on 8938 and FBAR before, there are quite a lot of differences between filing Form 8938 and Form 114. The first and primary difference is the organization to which these forms are submitted are absolutely different. Form 114 is submitted through FinCEN, and which is the Treasury Department, and Form 8938 is filed with the IRS. Then who must file the Form 8938 and 114? 8938 is required to be filed by individuals and domestic entities who have interest in specified foreign financial asset, whereas Form 114 is required to be filed by US persons who have financial interest in or a signature authority over a foreign financial account. The reporting threshold, like we had discussed, is different for 114 and 8938. 8938 has multiple limits based on the residency, based on the living status and filing status and living place of residency. And FBAR has a one limit of $10,000. In case of 8938, the maximum value of a specified foreign financial asset is what is reported, and that maximum value is calculated based on the 8938 instructions. It is generally the FMV, and Form 114 uses the periodic account, and the maximum value for foreign financial account is what we report. The rate of conversion is different in both Form 114 and 8938. rate in case of form 114, which is FBAR, we use the exchange rate at the end of calendar year, whereas in case of form 8938, we use the exchange rate which is end of the taxable year. Penalties in both 8938 and form 114 are different. In case of, like I had mentioned before, in case of form 114, the penalty is for non-willful failure, it is $10,000. However, the willful failure, it is quite a lot. And in case of 8938, the penalty is up to $10,000 and additional $10,000 for each 30 days of non-filing, up to a maximum of $60,000. There is also a difference, certain differences in what we report on form 8938 and form 114. In case of financial account held at a foreign branch of a US financial institution, that is not required to be reported on form 8938, whereas it is required to be reported on form 114. Similarly, reporting of any foreign stock or securities not held in a financial account is not required to be reported on form 114, whereas it is required to be reported on 8938. Reporting of any partnership interest is what falls under 8938, but not under form 114. Any indirect interest, however, in foreign financial assets through an entity is required to be reported on form 114 if there is ownership or beneficial interest, and there's no requirement to report on 8938. And reporting of foreign hedge funds and foreign private equity funds is what goes on form 8938, but not on FBAR. So these are quite a few differences between 8938 and form 114.
I appreciate you so perfectly lining those up for us and telling us the difference between all of them. That was really a great comparison and great information about these forms. So thank you so much for your time, and thank you, Rajesh and Varshika, both of you, for your time and insights on this. We are out of time, so that does bring us to the end of our conversation. Again, thank you so much, guys, for taking the time to share your insights and knowledge with us. Thank you, everyone who joined us today. To stay up to date, please subscribe and follow us on Facebook, LinkedIn, and YouTube. Make sure to give this video a like if it was helpful. And if you have any questions or suggestions, please send us an email anytime at info@truth.com. We would love to help you out. And make sure to join us back here next week for more pressing topics that truly matter to you and your business. Until next time, stay safe and take care. Thank you so much, everyone.